السلام عليكم يا جماعة. ده الفيديو الخامس لينا في Finance and Financial Management. This is our fifth video in Finance and Financial Management. It will be about cash flow estimation. Cash flow estimation is very important step in analyzing a capital budgeting project. Estimating the incremental after-tax cash flows the project will produce. Net cash flows consists of net income plus depreciation. In most situations, net cash flows are estimated by constructing annual cash flow statement. In determining incremental cash flows, opportunity cost, the cash flows foregone by using an asset must be included. Capital projects often require an additional investment in net working capital. Net working capital, an increase in net working capital must be included in the year zero initial cash outlay and then shown a cash inflow in the final year of the project. Replacement analysis is slightly different from that for expansion projects because cash flows from the old asset must be considered in replacement decision. The cash flows from the old asset must be considered in replacement decision. يبقى احنا هنا هنتكلم على توقع التدفقات النقدية، وده حاجة مهمة جدا في الكابيتال بادجيتنج. في الاناليسيس بتاعه الكابيتال بادجيتنج احنا خدنا قبل كده الكابيتال بادجيتنج، الباي باك بيريود والنت بريزنت فاليو. فان انا ابقى متوقع الكاش فلوز اللي هتجيلي في الفيوتشر اللي على اساسها انا بطبق اي تكنيك من الكابيتال بادجيتنج، دي حاجه مهمه جدا. النت كاش فلو ده بيبقى عباره عن النت انكم بلس الديبريشيشن. الاوبورتيونيتي كوست هي الكوست او الكاش فلو اللي هيروح مني بسبب ان انا هختار استخدم اسيت معين. يعني انا عندي الاوبشن A و B، انا الاوبورتيونيتي كوست ان انا اختار B هو ان انا هخسر الاكسبكتد كاش فلوز من A. كمان الريبليسمنت اناليسيز، يعني لو انا هعمل استبدال، هبدل مكنه مثلا فور اكزامبل old machine by a new machine by old machine, I must take in consideration the expected cash flows or the cost of the old machine. The exercise in front of you is going to show us how to deal with cash flow estimation. You have been asked by the president of Els Construction Company headquartered in Toledo to evaluate the proposed acquisition of a new earth mover. The mover's basic price is $50,000 and it will cost another $10,000 to modify it for special use by Els Construction, which means that there is a proposal to acquire a new machine which will cost $50,000 and will need an extra $10,000 in order to be able as a company to use it, which means that it will cost you 50 plus 10, $60,000. Assume the mover depreciation rate among the 3 years are 33,000, 45,000 and 15,000 respectively. It will be sold after 3 years for $20,000, which means this machine can be sold after 3 years and it will worth $20,000. The earth mover purchase will have no effect on revenues, but it is expected to save Els $20,000 per year in before tax operating cost, mainly labor. Els managerial federal plus state tax rate is 40%. There is 4 requirements. The first one, what is the company's net investment if it acquires the earth mover? That's what are the year zero cash flow. What's the cash flow in year 0? B, what's the operating cash flow in year 1, 2, 3? C, what's the additional non-operating cash flow in year 3? If the project's cost of capital is 10%, should the earth mover be purchased or not? The solution will be for part A, the estimated investment requirement or the cash flow in year 0 will be equal to the price of the machine, or the price you are going to pay as a company to acquire this machine, which is the $50,000, plus the modification cost, which is $10,000, plus the change in net working capital, which is an increase in net working capital by 2,000, which means that the total investment will be equal to 50 plus 10 plus 2000 equal 62,000. يبقى انا عشان احسب اول حاجه الانفستمنت او الفلوس اللي انا هتكلفها عشان خاطر اجيب الماشين ده، اللي هي قيمه الماشين نفسها زائد المصاريف اللي انا هدفعها عليها عشان اعمل لها موديفيكيشن عشان تناسب شركتي، زائد التغيير اللي هو بالزياده في النت وركينج كابيتال اللي هي الكرنت اسيتس ماينس الكرنت لايبيلتيز. طيب part B the required is determining the operating cash flow for year 1, year 2, year 0. The first step is the after tax cost saving. In the exercise he told you that the earth mover purchase will have no effect on revenues, but it is expected to save $20,000 per year in before tax operating costs, mainly labor. It will not lead to an increase in revenue. It will have no effect on revenue, but it will lead a saving, mainly in labor, but needing less labor, $20,000 per year. The $20,000 per year saving, you can consider it as an income. So by calculating the after tax of this after tax cost saving, it will be the 20,000 the saving times 1 minus the tax, which is 40%, 1 minus 40%, or times 60%, which will give me $12,000 in year 1 and year 2 and year 3. يبقى اول خطوه يا جماعه الافتر تاكس كوست سيفنج، اللي هو قايل في المساله ان شراء الماشين ده مش هيأثر على الريفينيوز، لكن يعني مش هيزود الريفينيوز، لكن هيوفر لي $20,000 في كل سنه، اللي هم غالبا هيبقوا بسبب مثلا انها التكنولوجيا فيها احسن، هيوفر عماله، فهيوفر له $20,000 في كل سنه. $20,000 في كل سنه، فبيحسب القيمة الصافية بعد ما يدفع الضريبة. أي انكم بيجي للشركة بنخصم منه الضريبة اللي هي 40%، فهيبقى الصافي بتاعه 12,000. Depreciation, he told you in the previous slide that the depreciation rate among the 3 years respectively is 33,000, 45,000 and 33%, 45% and 15%. So in order to calculate the row of the depreciation, you are going to multiply in the first year 33% times 60,000, which is the cost of the machine, the price plus the modification cost, the price plus the modification cost, which is 60,000, not the 62. We are not going to include the increase in the net working capital because depreciation is mainly calculated by multiplying the depreciation rate by the cost of the fixed assets, which is the 50 plus the 10,000. It will give me 19,800. In year 2 we are going to multiply 45% times 60,000. It will give me 27. And in year 3 we are going to multiply 15% times 60,000. It will give me $9,000. Depreciation tax saving is calculated by multiplying the value of the depreciation by the 40% of the tax rate, So multiplying 19,800 by 40%, it will give 7,920. And by multiplying 40% times 27,000, it will give us 10,800, and so on. Then the net cash flow in year 1 and year 2 and year 3 will be calculated by adding the after tax cost saving plus the depreciation tax saving, which will be the 12 plus the 7,920, give me 19,920. In year 2, 12,000 plus 10,800 800 will give me 22,800, and in year 3 it will be 12,000 plus 3,600 will give 15,600, which means, as I write to you in front in the slide, 1 plus 3, number 1 after tax cost saving, plus number 3 the depreciation tax saving. This slide shows the illustration of the calculations that I told you in the previous slide, which is multiplying the 20, the saving by 1 minus tax rate, and how the calculation was of the depreciation was calculated, and finally the depreciation tax saving, how it was calculated. The third requirement will be calculation of the end of project cash flows, which is the salvage value, $20,000. He told you in the exercise that the machine can be sold at the end of year 3 for $20,000. Tax on salvage value 6,320. How we got this number? Look downward in the slide. You will find that the sales price, which is the $20,000, the price that we are going to sell the machine at the end of year 3 is $20,000 less the book value. How we calculate this book value? The book value, you know that the depreciation rates, he told you that it's 33%, 45% and 15% respectively among the 3 years. So by adding the rates of the 3 years, 33 plus 45 plus 15, it will be equal to 93%. 93% of the assets will be depreciated. So the remaining value, or the book value of the assets, will be equal to the remaining 7% times the cost of the asset, which is $60,000. So by multiplying 7% times $60,000, the value will be $4,200. So the sales price, the 20,000 minus the 4,200, will be equal to $15,800, which is the taxable income upon which we are going to calculate the tax rate, which is 40%. So by multiplying the 40% times 15,800, it will give me 6,320. So the tax on the salvage value will be 6,320, and you have to clarify these calculations if you are required to solve such a problem in the exam. Net working capital recovery, $2,000. So the net working capital recovery 2,000, so the result will be 15,680. يبقى the end of the project cash flow is 15,680. The final requirement is to determine whether the company should take the decision of acquiring this machine or not. In order to reach to this decision, you should calculate the net present value of acquiring this machine by this timeline in front of you, starting from year 0, 1, 2, and 3. You are going to put the values of the expected cash flows in each year. In the first one, year 0, which is requirement number A, we calculated as 62,000. We put it in negative because this is the investment or the values the company is going to pay. يعني دي القيمة اللي الشركة هتدفعها، عشان كده حاطينها بالنيجاتيف. عشان تشتري الماشين دي هتدفع 62,000. Then at year 1, the estimated cash flows equal to 19,920, and this was calculated in requirement number B. اللي احنا حليناه في number B ان احنا حلينا ال estimated cash flows من year 1 to year 3. So we are going to recopy. هننقل القيم دي. These values 19,920, 22,800, 31,280. He told you in the exercise that the cost of capital is 10%. So you are going to calculate the net present value as we have taken before in the capital budgeting techniques. Negative 62,000 plus the estimated cash flow over 1 plus R, or the cost of capital to the power N. to the power n, which is the period. So 19,920, the cash flow of year 1, over 1 plus 10% to the power 1, which is year 1, plus 22,800, which is the expected cash flows for year 2, over 1 plus 10% the cost of capital to the power 2 denoted for year 2. والأخيرة and so on. والأخيرة هنحط ال 31,280 اللي هي قيمة الكاش فلو المتوقع في السنة الثالثة على 1 زائد 10% اللي هو قايل لي cost of capital to the power 3 اللي هي للسنة الثالثة. The result will be equal to negative $1,547, which means that the net present value of acquiring this machine will be negative value. So as long as the net present value is less than 0 or is a negative value, this means that the company shouldn't take the decision of acquiring this machine. The company shouldn't purchase this machine. This exercise is similar to the previous one, but with more details. The Dutton Toy Corporation currently uses an injection molding machine that was purchased 2 years ago. This machine is being depreciated on a straight line basis toward a $500 salvage value, which means that the salvage value will be $500 for this machine, and it has 6 years of remaining life. Its current book value is $2,600 and it can be sold for $3,000 at this time. Thus, the annual depreciation expense is 2,600 minus the 500, the salvage value, over the 6 years, the remaining life, equal to $350 per year. Dutton is offered a replacement machine which has a cost of $8,000, an estimated useful life of 6 years, and an estimated salvage value $800, which means this exercise is talking about a replacement. The previous one was talking about only acquiring a new machine. Here you are going to replace an old machine with a new machine. This machine falls into the MACRS 5 years class. The depreciation rate are 20, 32, 19, 12, 11, and 6% from year 1 to 6 respectively. The replacement machine would permit an output expansion, so sales would rise by $1,000 per year. Even so, the new machine's much greater efficiency would still cause operating expense to decline by $1,500 per year, which means acquiring the new machine or the replacement by the new machine will lead to an increase in sales by 1,000 and decrease in operating expenses by 1,500, because this will affect the net working capital. The new machine would require the inventories be increased by $2,000, but accounts payable would simultaneously increase by $500. So account payable will increase by 500 and inventory will increase by $2,000, which means that the net increase will be 2,000 minus 500 will be 1,500. Dutton's marginal federal plus state tax rate is 40% and its cost of capital is 15%. Should it replace the old machine? In order to answer the question, you have to follow the same steps like the previous exercise. عشان أقدر أحل أو أجاوب على السؤال هو ياخد الماشين ولا لأ, which means I'm going to calculate the net present value of the new machine. So I have to calculate the estimated operating cash flows among the life of the machine in order to be able to calculate the net present value. The solution will follow the same steps like the previous exercise. First, we are going to determine the net cash flow at year 0 or at T0. هنمشي على نفس الخطوات اللي عملناها في الاكسرسايز اللي قبل ده. اول خطوة ان انا هحسب الانفستمنت او الكاش فلو في تي 0 او في يير 0. والكاش فلو ده ممكن يبقى يعني in او out. In the previous exercise, the first year the cash flow is equal to negative 62, if you remember, because this is the value of the investment the company is going to pay. Here, The purchase price of the new machine is $8,000. That's why he put the $8,000 between brackets, means as a negative value because he is going to pay. The sale of the old machine is $3,000 in a positive value because when he is going to take the decision of the replacement, he is going to buy the new one and sell the old one. So when he sell the old one, he is going to receive $3,000. Then the tax on the sale of the old machine is negative 160. From where we got this 160? The 160 come from 3,000, which is the sale price of the old machine, minus its book value, and it's mentioned in the previous slide in the exercise 2,600. So the result will be $400, and we are going to multiply it by the tax rate, so the result will be 160. 40% times 400 equal to 160. That's why we put here tax on sale of old machine negative 160. Change in net working capital. The net working capital is going to increase by 1,500. And this is clear in the previous exercise when I told you at the end of the exercise, he told you that the new machine would require that inventories, and inventories is current asset, to increase by 2,000, and account payable, which is current liabilities, is going to increase by $500. So the result will be 1,500. 2,000 minus 500, the result will be 1,500. Then, now examine the operating cash inflow. The sales increase by, here is the illustration of the operating cash flow, which is sales increase by $1,000, cost decrease by 1,500, and this was clear in the previous slide when he told you that the replacement machine would permit an output expansion. So sales, which means that there is an increase in production, so the sales would increase by $1,000 per year. Even so, the new machines much greater efficiency would still cause operating expense to decline by 1,500. So the expenses will decrease and the sales will increase, which means that you are going to have revenue or increase in revenue by the 1,000 plus the 1,500, $2,500. Multiply the 2,500 by the 40%, it will give you $1,500, which is the after-tax operating revenue increase. Again, total investment at year 0 will be equal negative 8 plus 3 minus 160 minus 1,500. The result will be negative $6,660, which is the value of the investment the company is going to pay at year 0 if it take the decision of the replacement. يبقى احنا عندنا يا ولاد اول حاجه البرتشيز برايس، حطينا سعر اللي انا هدفعه لو خدت قرار الاستبدال وان انا هشتري المكنه الجديده. طيب انا هشتري الجديده فهدفع 8، بس طالما خدت القرار ده هبيع القديمه وهقبض 3. وطرحت ال 160 دي برضو بالنيجاتيف. جبتها منين؟ انا قلت ان الماشين هتتباع القديمة ب3 والبوك فاليو بتاعتها 2,600، يبقى الفرق 400 بدفع عليه الضريبة اللي هو 160. طيب نمبر بي التشينج ان النت وركينج كابيتال اللي هو انكريز النت وركينج كابيتال. عرفت منين ان هو انكريز؟ لان هو بيقول لك هنا ان الانفنتوريز هتزيد، والانفنتوريز دي كارنت اسيتس، والاكاونتس بيبل هتزيد برضو، دي كارنت لايبيليتيز، يبقى كده الفرق بينهم هيبقى 1,500. تحت السيلز انا هبقى السيلز هتزيد، ده نتيجة ان انا هاخد قرار الريبليسمنت كل سنة ب1000، وفي نفس الوقت الكوست هيحصل decrease في الكوست نتيجة ان انا هجيب الماشين دي هتحسن لي في الانتاج، فهقدر ابيع اكتر وهتقلل التكاليف. فيبقى انا كده كاني كسبت ايه، وفرت 1500 من الاوبريتنج اكسبنسز وكمان زودت السيلز ب1000، يبقى انا معايا 2500 از ريفينيو. هحسب عليهم الافتر تاكس اوبريتنج ريفينيو في 40% هيديني ال 1500. يبقى آخر حاجة ال 2500 اللي هي ال increase in pre-tax operating revenues دي بعمل لها multiply، بشيل منها I'm going to deduct the tax rate. So I'm going to multiply the 2500 by 1 minus tax rate. It will be equal to 1500. The depreciation starting from year 1 to year 6. At the beginning, I put the depreciation of the new machine. The depreciation of the new machine, he told me in the slide of the exercise that the depreciation rates from year 1 to year 6, 20, 32, 19, 12, 11, and 6% respectively, which means I'm going to multiply the 8000, which is the cost of the machine, by 20% in year 1, it will give me 1600, and in year 2 multiply 8000 by 32%, it will give me 2560, and so on. in year 3 هضرب ال 8000 في ال depreciation rate بتاعت السنة الثالثة اللي هي 19%، هيديني 1520، وهكذا في بقية السنين. هبتدي أضرب في السنة الرابعة 8000 في 12، وفي الخامسة 8000 في 11، وفي الأخيرة 8000 في 6. طيب ال depreciation of the old machine, he told me in the exercise that the depreciation of the old machine equal to $350 per year. So I'm going to write $350 in each year, which means that the change in the depreciation, I'm going to subtract the depreciation of the old from the depreciation of the new. I'm going to replace the new by the old. So I'm going to remove the depreciation of the old. So the first year 1600 minus 350 equal 1250. وفي السنة التانية 2560 ماينس 350 هيديني 2210، وهكذا في بقية السنين. هبتدي أحسب. I'm going to calculate the tax saving. I'm going to multiply the difference in the depreciation times the tax rate. The difference in the depreciation times the tax rate, which will be 40% times 1250, and so on until we reach to year 6. It will give me the values in the row of the tax savings. This table will show us the expected cash flow starting from year 0 to year 6, taking into consideration. Now recognize that at the end of year 6, Dutton would recover its net working capital investment of $1,500, and it would also receive $800 from the sale of the replacement machine. However, since the machine would be fully depreciated, because as we know that the depreciation rates here cover 100% of the value of the asset, the firm must pay 40% times 800 equal 320 in taxes on the sale. Also, by undertaking the replacement now, the firm forgoes the right to sell the old machine for $500 in year 6. Thus, this $500 in year 6 must be considered an opportunity cost in that year. No tax would be due because the $500 salvage value would be equal the old machine's year 6 book value, which means because the machine is going to take the decision of replacement, so it will lose the value that it would gain if it keep the old machine and paid it and sell it at the end of year 6. So the net investment at year 0, which we calculated at the beginning, 6,660, and then the after tax revenue increase, which is the 2,500 times 1 minus the tax, it will give me us 1500 from year 1 to year 6, and then the depreciation tax saving, which we calculated in the previous slide for each year starting from year 1, 500, 884, and this result from multiplying 40% times the change in depreciation between the old and the new machine. Working capital recovery, which is the 1500, which is the increase from the inventory, and the decrease in the increase in account payable, increase in inventory and increase in account payable, increase in inventory 2000, account payable 500, so the result is 1500. Salvage value on the new machine 800. Will tax on salvage value of the machine 320, which is 40% times the $800. Opportunity cost of the old machine, which means the value you are going to lose by getting rid of the old machine, $500. The net cash flow will be for each year starting from year 0 to year 6 as it's in front of you in the last row. يبقى هنا اللي قدامنا الجدول ده بيورينا، بيحسب لنا في الآخر التدفق النقدي المتوقع لكل سنة بعد ما حسبنا كل حاجة. يعني احنا في يير 0 حطينا النت انفستمنت اللي احنا حسبناها في الاول خالص في اول الحل، ما بين ان احنا هنشتري الجديدة وهنبيع القديمة اللي احنا حطيناها في الاول، وفي الاخر ادتنا 6660. وبعدين تاني سطر اللي هي التاكس ريفينيو اللي احنا حسبناها لما قلنا ان هيبقى فيه انكريز في السيلز وديكريز في البرودكشن في الاوبريتنج اكسبنسز، فهيديني 2500 ضربناها في 1 ماينس التاكس ريت، يبقى القيمة بتاعتها بعد ما شلنا التاكس 1500. وده موجود برضو في السلايدز اللي قبل كده في الحل. الديبريشيشن تاكس ريت سيفنج اللي احنا حسبناه في السلايد اللي قبل دي على طول. الوركينج كابيتال ريكفري اللي هو الانكريس في الانفنتوري والانكريس في الاكاونتس بيبل، والفرق بينهم هيبقى 1500. السلفج فاليو ليه حط كل ده؟ بيبقى في اخر سنه، اللي هو الوركينج كابيتال ريكفري دايما بيبقى فيه في اخر working capital recovery is usually at the last year, that's why we put it here in year 6 only. السلفج value also it happened at the end of the machine life, that's why we put it at year 6. The tax on salvage value we calculated by multiply the tax times the 800. الاوبورتونيتي كوست معناها القيمه اللي انا هفقدها باختياري ان انا ابدل واشتري ماشين جديده. فانا كان هيبقى عندي قيمه للماشين القديمه $500، خلاص انا كده هخسرهم بان انا ببيعي او بتخلصي من الماشين القديمه. فاداني الاكسبكتد كاش فلوز في كل سنة. وبعدين عشان أقدر in order to be able to take the decision of the replacement I have to calculate the net present value exactly like the previous exercise. So I'm going to calculate the net present value by net present value equal negative 6660 plus the 200, which is the expected cash flow of year 1 over 1 plus 15% the cost of capital to the power 1 plus 2384 over 1 plus 15 to the power 2 and so on. The net present value will be equal to positive $1,335. Thus, the replacement should be made, or the company should take the decision by replacing the old machine by a new machine. And this is the end of the exercise. Thank you.